The markets are still looking pretty rough, so the question now again is, are we going to face another market crash? Or are we going to do the same thing we did last time and hit these lows and rebound higher? Well, we could always go to our research from macro ops and figure out what's happening. And what's been happening that started at the beginning of this year is that we've been in a large sideways volatile regime, which is where you get this type of price action, down, up, down again. And what tends to happen in these regimes is big swings of the narrative pendulum, which means the consensus, which is like the broader market, they go from being very bullish to very bearish and then back again, hence the swings. But what happens though is that usually ends in frustration, because regardless if you're being bearish or bullish, you're getting your stops hit. You try to be bullish, it turns around. You try to be bearish, it turns around. So that's why eventually the market ends up in just peak frustration. The market's not trending in a certain way, it's just choppy up and down. And once that happens, basically everyone in the market gives up and just goes into cash. And I say everyone, but of course it's not everyone, but enough to be the general sentiment. And we're getting closer and closer to this peak frustration. Bearish sentiment right now is at extremes and cash levels are high. And remember, what do we know about sentiment? It's kind of a reverse indicator. If everybody's really bearish, that means something bullish is more likely to happen in the market. Why? Because you have a bunch of cash on the side. Like right now we're saying cash levels are high. So part of this bearish sentiment is everyone talking about the yield curve inverting, the Fed forcing a hard landing, and all the normal talking points that you see that lead up to a bottom in the market. But to get to an actual real bottom in this market and for us to start a new bull trend, we got to see one more shakeout. That means another leg down in stocks, which is exactly what we're seeing right now. And where we're thinking this market will head to, at least for the S&P, is to the 4180 area, which is right here. So almost near the bottom right here that was previously formed. So that's another 2% down from where we are right now, even less than 2%. You look at bonds and they continue to just fall off a cliff regardless of what the stock market is doing. Because normally what happens if the stock market is getting a little squirrely, you see people start buying up bonds, but that just hasn't happened. So rates are flying higher and the Fed remains hawkish. Not good for the stock market. But here's the thing, we're starting to near a point where the narratives around hot inflation, a hawkish Fed, and a hard landing are starting to overshoot reality. So people are getting too bearish, and one more washout in the stock market should basically get us there. Now, of course, in a market regime like this, sideways volatility, you gotta hold your opinions loosely because anything could happen. But I will tell you, over this next week, Alex, our lead researcher, is out in Costa Rica. And whenever he's traveling, big things happen in the market, usually bad. So we could get that fast move lower this week, just based off of our 100% hit rate Alex's traveling indicator. But one thing I do like about a market like this, in which it's going sideways, is that it becomes a stock picker's market. So I always talk about our strategy and our training that teaches you how to do it. Well, that strategy is working better in a market like this because we're able to pick the stocks that are trending higher. So even during this period right here when the market has been falling, we've been hitting some big winners and our portfolio is doing better and better. And we did have a rough start to the year in this portfolio because it took some time to basically calibrate to this new market. But once the rotations got in place, like you saw this last month, we had big gains for everyone using that system and strategy. And again, this was happening while this market has been falling. So it's always rough when you're using a system because there can be months and months of losing. But then it's funny because your returns will look one way for 6 months of the year and then completely different for the next 6 months. And you end up on the year positive, doing way better than the market. But it is just mentally tough and a lot of people can't handle it, which is why most people shouldn't be actively investing in the market. But if you are, you do need a system like the one we're talking about. And it especially shines in a sideways market. So if you're interested in that, definitely check out our training. It'll show you how to do what we do. I'll put a link down below in the description and comments. And I will see you again next week, or probably not. We do this like every other week now. So I'll see you then.